Nvidia has now surged to a $4 trillion market cap, but the company Wall Street has been obsessing over lately, surprisingly, isn't Nvidia, it's Intel. Over the past 4 weeks, Intel stock has nearly doubled, and now more and more institutions are asking, could the next massive AI opportunity slowly be shifting from Nvidia to Intel? Hi everyone, this is Stock Market Breakdown. If you want to go beyond just watching price moves and actually understand the logic behind the market, make sure to like and subscribe. Let's dive right in. Over the past 2 years, the biggest winner in AI has clearly been Nvidia. Since 2023, Nvidia's stock has surged nearly 10x, and its market cap has even crossed $4 trillion. The reason is simple. Almost every major AI model in the world depends on Nvidia. OpenAI, Microsoft, Meta, Google, and Amazon are all aggressively buying AI chips. But now, the AI industry is starting to shift. The focus is no longer just training models, it's about deploying AI at a global scale. AI is moving into office software, healthcare, autonomous driving, enterprise systems, and many other industries. And behind all of that is massive AI infrastructure demand. Microsoft's AI capital spending this year is expected to exceed $80 billion, while Meta could spend more than $70 billion. A lot of people think the AI rally is already over, but honestly, the past 2 years were probably just the beginning. What really matters now isn't only the models themselves, it's who can actually bring AI into the real world. And once AI fully expands into areas like healthcare, advertising, and enterprise software, the demand for AI servers and data centers could become much bigger than the market currently expects. Let's be real, Nvidia is still the strongest company in AI right now. Its newly announced Rubin platform is expected to deliver at least double the performance of the previous generation. AWS, Google Cloud, and Microsoft are already preparing next-generation AI clusters around it. But as AI demand keeps exploding, new problems are starting to appear. The biggest one is that Nvidia has simply become too massive. A $4 trillion valuation means the market will expect extremely high growth for years to come. At the same time, GPU supply is getting tighter. According to SemiAnalysis, future global AI GPU demand could exceed supply by more than 40%. There's a classic rule in the market. When one company becomes the absolute leader of a sector, capital eventually starts looking for the next opportunity. Institutions can't keep betting on only one company forever, and Intel's recent rally is basically the market starting to position for the second phase of AI growth. A lot of people recently noticed Intel suddenly exploding higher over the past 4 weeks. The stock has nearly doubled. The biggest reason is simple. The market is starting to believe in Intel again. For years, investors saw Intel as outdated, lacking innovation, unable to compete with AMD, and nowhere near Nvidia. But now, that narrative is slowly changing. The U.S. government is aggressively pushing semiconductor manufacturing back to America. More than $50 billion has already been committed to support domestic chip production, and Intel remains one of the most important American chip manufacturers. A lot of times, the stocks that move the fastest aren't the companies already considered the strongest. They're the companies the market ignored until sentiment suddenly changes. And right now, the biggest shift around Intel is investor expectations starting to reverse. The AI industry is entering a very important new stage. The first phase of AI was about training large models. The next phase is about deploying AI globally. AI won't just stay inside chatbots anymore. It's moving into AI search, office software, advertising, healthcare, robotics, and autonomous driving. According to McKinsey, AI could add as much as $13 trillion annually to the global economy by 2030, but supporting all of this requires massive infrastructure, more data centers, more AI servers, and far more computing power. A lot of the biggest market booms don't happen during the initial technology breakthrough. The real money usually comes during the infrastructure expansion phase afterward, and AI is starting to enter that stage right now. That's why capital is slowly spreading from single AI companies into the broader AI ecosystem. Over the past few weeks, Intel has started showing several major signals. Trading volume has surged, institutional money is flowing back in, and more analysts are upgrading the stock again. That's because the market narrative has changed. A lot of investors used to believe Intel had no future left, but now, more people are realizing the AI market is simply too large for there to be only one winner. Bloomberg estimates the global AI chip market could eventually exceed $1 trillion. Some of the biggest opportunities in the market come from changes in perception, because what really drives stocks higher usually isn't the news itself, it's when investors suddenly start believing in a new story. And right now, Intel is starting to experience that shift. Of course, I have to be honest here, Intel still faces major risks. Its biggest competitors are Nvidia and AMD, and especially with Nvidia, the global AI ecosystem is deeply tied to CUDA, which creates a massive competitive moat. At the same time, AI chips are an extremely expensive business. Advanced manufacturing, HBM memory, and advanced packaging all require enormous capital investment. Intel will likely continue facing significant cash flow pressure over the next several years. So right now, investors buying Intel are mostly buying future expectations. High reward always comes with high risk. That's exactly why the AI sector has become so volatile. Because the market isn't trading the present anymore, is trading who could dominate the next phase of the AI supercycle. More institutions are now starting to believe the biggest AI opportunity may not just be Nvidia or Intel alone. It could be the entire AI supply chain. AI growth is driving demand for chips, servers, data centers, electricity, cooling systems, and cloud infrastructure all at the same time. Companies like TSMC, ASML, Micron, Supermicro, and Vertiv have all been performing strongly recently. Goldman Sachs predicts global AI data center electricity demand could double over the next 5 years. A lot of retail investors are still focused on individual stocks, but major institutional money is already positioning across the entire AI ecosystem. Because if AI keeps expanding, the winners won't just be chip companies, the entire infrastructure network could benefit. So here's the final question. Could Intel become the next Nvidia? Honestly, nobody knows yet. But what the market is really watching isn't whether Intel can surpass Nvidia, it's whether the AI supercycle could become much bigger than anyone currently expects. Because if AI demand keeps exploding, the entire supply chain could continue benefiting, and the biggest profits in the market usually come from gaps between expectations and reality. Over the next several years, AI will continue reshaping the entire market, and the biggest opportunities often appear where disagreement is the highest. That's it for today's video. Thanks for watching, and if this helped you, make sure to like and subscribe. Do you think Intel could become the next major AI winner, or will Nvidia continue dominating the AI era? Let me know in the comments, and I'll see you in the next one.